Welcome back to another Your Average Trader Trading Made Simple video. Man, you guys have been awesome in terms of support for my channel since I started. And I just want to tell you thanks, and I appreciate all the messages I've been getting. That motivates me to make more content for you guys. Right? Today, I got a nice and short video for you guys, because you know that's the way we do it here. We are going to look at the simplest strategy to trade the wildest volatility index, VIX75. Let's go. If you know me, then you know I like to make trading as simple as possible. And the way to do that is to eliminate unnecessary variables from your decision-making process. We are going to look at the simplest way to get VIX75 entries in a trending market using the old break and retest strategy. Yes, the old break and retest strategy. This is the 1 hour time frame of VIX75, and we are going to look at everything that occurred before the break of this descending channel and how you could have possibly taken a buy setup, right? So last week Sunday, I sent out the weekly outlook for VIX75 in my group, and it was ranging between a 2 hour supply zone and a demand zone. And we know the only way to trade a range is to buy demand and sell supply, and that's what we did last week, catching a move up and then catching a move down. However, the same strategy can't really be applied when VIX75 is in a trending market, because when it's trending it's a completely different animal. So let's take a closer look at how to take trades on VIX75 in a trending market. If we take a closer look at how price interacts with the bottom of this descending channel and on the lower time frame, then a lot of clues to get into trading opportunities start to present themselves. So we are going to start by taking a look at how price reacts at the bottom of the channel. Alright, here we are on the 5-minute time frame, and you can start to see how the market switches its direction with a simple break and retest of a broken price ceiling, right? If your eyes haven't been trained to see such setups, then here's how you would look at it, right? This is the bottom of the descending channel that we were looking at from the higher time frame, right? This is how we would look to take a trade here. So we have on the line chart, we have a price ceiling right here, right? Price eventually breaks that ceiling and it comes over here, retest that broken ceiling. Now it respects it as a price floor. You could have taken an entry right here, let's say risking 50 pips in return for 350 pips for a risk to reward of 1 to 7, right? So that is how you would get into a trade like that. Simple break and retest. Now let's say you missed that first entry, right? Of your mind, you know that there is a possibility that VIX75 is going to trade up to the top of the channel. So you know that your buy bias is still valid. So what do? You simply just apply the same principle again by looking for a broken ceiling to get retested and buy on that retest, right? So if you missed this first buy setup, all you have to do now is the same thing that we did earlier on the 5-minute time frame. Line chart, look for the most recent broken ceiling, which is right here, right? And then we look for it to be retested as a price floor, and then we do the same exact thing, risk to reward 50 pips, yeah, in reward for 350 pips, right? So if you missed that first setup, here is another entry opportunity into getting into another trade, right? Now, as you know, risk management is the foundation of my strategy. So if you were to take that same setup that we were looking at, stop loss 350 pip target, risk to reward of 1 to 7, If you were to use a minimum lot size, this would be what you were risking in return for this, and so on and so forth, and you can use this to calculate how much you are willing to lose based on that setup, right? So the strategy is easy to use, especially on the lower time frame, to get great risk to reward setups. But in order for it to be accurate, you need to know where you are on the higher time frame and what overall trend is. Or you could be taking a break and retest trade, but you're taking it in the wrong direction of the overall trend. And you know what that means? That may result in losses if not traded properly. Like in this situation, right? Let's say we came off of this nice 1 to 7 risk to reward, right? And we've identified this as an area of price sensitivity. So let's say we're looking to take a break and retest trade from here for something like this, right? Got that? If we were to drop on our risk to reward here, right, risking 50 pips, 1 to 7 again, for 350 pips, right? Your target wouldn't have been hit. You would have probably ended up price would probably hit your stop loss if you weren't actively managing this trade. Now the reason for that is because on the higher time frame we broke the structure, so we were bullish now. So we have to always know where we are on the higher time frame, which is why it's always best to stick with the higher time frame structure and trend, so you can avoid making silly counter trend trades, as VIX likes to trend. So it's much easier to get in with the trend than to try to find reversals. You get me? Alright guys, so try this the next time you look at a VIX75 chart in a trending market, and maybe you can find yourself some great setups that way. As usual, if you found value in this video, then hit that subscribe button, drop a like and share it with your friends. If you are interested in joining my VIX only community, then hit me up on IG or Telegram. And if you haven't followed me on IG yet, my friend, then you know what to do. That's it for this video. I'll catch you guys in the next one. Your average trader, I'm out.